I think most of us can go on mute.
All of you. Yeah. So good morning and thank you to each one of you who have joined us today morning on a lovely Saturday. And today we are here to talk about a very new concept that's fast growing in India, which is fractional commercial real estate. And we hear that some of the major cities like the Bombay, Pune, Bangalore, Hyderabad are what are the favorable destinations today. And this market as such has been growing at a great speed. It says that in the last 5 years, around 750 crores of transactions have been done and a lot of very fancy numbers coming out there. And so we have with us to talk about this, Sudarshan Lodha from Strata, which is a pioneer to offer fractional ownership investing in commercial real estate in India. And they also envision to be the largest alternative investment platform in the country by offering an easy to use online platform also. Yeah, so I think that's where he's bringing in a lot of his expertise of bringing the disrupting this whole real estate forum. And it's interesting to know that he's a lawyer with 10 years of experience in real estate and private equity law, and very active in the Indian startup scene. And I think what really excited and in news is your latest collaboration with the IPL, which is starting off today with the Mumbai Indians. I think that's what is what you were in news lately, and we were very excited about it. And thank you, Sudarshan, for being here with us today. And over to you, and we're very excited to listen to you. And we will have kindly post all your questions in the chat box. We shall take it up towards the end. And those of you on the YouTube could post it on the live chat, and Pooja will then collate everything and then moderate it towards the end. Over to you, Sudarshan.
Okay. Thank you. Thank you first for inviting to be a part of the association and have a liberty to speak to everyone. So I'll just break it up into 3 parts. First, with respect to what Strata is doing. Second, how does it work? And third, a little bit on how technology is solving for a large thing altogether, right? So coming on the first part, at Strata, what are we doing is the most simplest thing which people have done together. I'm sure many of you would have also bought some property with your friend, with your family, etc. What happens, there are 2-3 things which can happen when you're buying, and as a lawyer, something which I've learned over the years, going through multiple litigation cases, etc., is 2-3 things which can happen. First, let's say with Deepak sir, I want to buy a property, Deepak trusts me, and I'm proposing something to Deepak sir, and Deepak sir might have only 2-3 things at that time. First, he might doubt that I think Sudarshan has money, why is he bringing it to me? No matter I might be his best friend, but always there's this trust issue which exists when it comes to investments, and especially a large investment as such. Second, he might not have the liquidity what I require to buy a particular opportunity. And third, he might not see the same vision what I'm seeing in buying such an asset. And eventually, if I don't get that money, the property slips out of my hand. Then I meet Lata in an alumni association. I say, Lata, I wanted to buy this. I couldn't find people who could co-invest with me and acquire it. And Lata would be like, hey, you should have told me, I would have invested. So what biggest learning we got from the entire thing is when it comes to investments, people go to the inner circle of friends or the most trusted people. They would not reach out to the other second layer of friends as such. And rightly so, you should not as well, because it's large investment and you don't know what the other person thinks. But this is how it is as such. So we felt if a platform could solve the trust, the liquidity, the vision issue, etc., I think there's a large market for us to do it. So what we did is nothing but my years of learning, being a lawyer. We structured a product which is legally correct, takes care of everyone's interest, takes care of everyone's rights, and at the same time, like-minded people who can trust and believe a common platform, who can handle everything on behalf of them, is what we are solving at Strata. So we allow investors who don't know each other to co-invest, come together, own the asset, enjoy the fruits of the asset, and then we collectively decide when to exit the asset and enjoy returns of it. Now, what we're doing in India, obviously, like I said, is unorganized. It's been going on for years altogether, just that we've taken it to an organized approach. But across the West, especially in the US, North American markets. This is upwards of a $50 billion market, actively traded, transacted in the last 6-7 years since it started being operational. Started from real estate to a point today, it's moved to buying farmlands, buying limited edition Ferrari cars, memorabilia. Imagine buying the Dhoni's bat, which hit the six and won the final World Cup for us. All those are now fractionally being sold, acquired, traded in private markets as such. So it's endless to the opportunity what fractional real estate or fractional investment in itself has. And this is what we are solving for. So anything where capital is the reason, democratizing is the only way it can solve for in a large way altogether. I'll just take you guys through a deck, a little bit about the deck so that you get an idea as such. India's wealth, just to give an idea, we are a 5 trillion wealth economy. We are not an economy that way, but our people have that kind of money, at least declared money at least. Gold being 26% of India's wealth, where it's parked, and one of the biggest things which government of India has been trying with multiple ways in which they can start monetizing that debt investment which is there. And for Indians, it's a safe haven. Whenever anything happens, they know gold is one thing which we can always rely on. We have more than 10-15% of the whole world's gold repositories in Indian households itself, right? So that's the amount of gold which exists. Second is FDs and bonds. Again, people's mindset being conservative, they'll always want to park something where the capital is safe. Third comes residential real estate. So if you're staying in your own house, that's end use, that's not investment. If you buy a house beyond the house you stay in, that's investment. There's your second home, third home, your farmhouse, etc. They're all investments as such. That's 21%. $1 trillion worth of residential real estate for investment is being bought by India, on a regular basis. And then comes your equity, insurance, etc. overall from a return standpoint. So what we've understood from a mindset is people are looking for capital safety. This is one of the most important points. Returns probably becomes the second, because gold, residential real estate, FD bonds are all 3, 4, 5% returns. Gold is a different asset class, but FD bonds, residential is 2-3% returns. And people are, the whole reason why they invest is for capital safety. Let me take you an example. You go to a casino with 1 crore with the intent of, gambling, doubling your money, tripling your money, or whatever. You go play your roulette, you take 1 crore, you make 2 crores out of it. Now, there are two kinds of people. One who will say, I'll keep that 1 crore which I brought in my pocket and play with that profit and continue trying to gamble my night out. The second approach, what people would do is take 2 crores, make it 4, take 4, make it 16, make it 8, 8, make it 16. But there'll be a point where I'll say, okay, I'm done now and I want to park some of my money into a different asset class or whatever and preserve that capital. So going to your first example, when you have 1 crore and you have 2 crores, you park 1 crore, and these are the 3 asset classes: gold, FD bonds, residential real estate. Is why, because people's mindset is, now that I made money, I want to preserve capital and save. So people who invested in March 2020, April 2020, sitting on massive 200-300% kind of gains in your stock, people are like, okay, now that I'm going to book my profits in stock, where do I invest? And that's when people go to. These are the kind of asset classes which people go to purely because the mindset is, I want to save my capital more than anything else. So the risk-taking ability from a 1 crore who made 2 crores suddenly parks his 1 crore into safer asset class. 100% risk becomes 50% risk purely because they want to invest into safer asset classes. So our idea was clear that CRE is a great asset class, high rental yield, long-term value appreciation, etc., but not being able to invest for multiple reasons, right? Multiple reasons being like high capital requirement, inaccessibility. I want to buy, Hiranandani Powai asset right outside, opposite ID Bombay, but how do I know who's selling what's selling? These assets are not traded, in your magicbricks.com, nobroker.com. These are traded in smaller communities of large premium real estate brokers or ultra HNI families as such. Then comes the issue of tenant management, asset management. I think in today's world, it's a huge thing. Most of the people who are investing in real estate are parking their passive money, which means they don't know the real estate business in and out, but they presume they know. Residential is very easy and very simple to handle, but commercial works a little differently. You need to look at multiple parameters and then do it. So this is where Strata comes in and solves for the largest problem which India has seen as such by getting that whole capital safety mindset, capital preservation mindset, long-term value appreciation mindset, and generate higher rental returns for investors as such. Now, what are we currently focusing on from a market standpoint is today in India, people who make 5 crores a year, let's say $1 million a year, are only about 8,000 people in India. This is as per income tax data. I'm sure many make a lot more, but what they declare is only about 8,000 people in India who make upwards of close to $1 million a year. People who make 20 lakhs to 5 crores are close to about 1.8 million, and it's growing at 20% year on year for that matter. Now, clearly shows that this kind of capital pool today aspires to own, let's say, a Powai property or a capital property in Bombay or a 1 BKC or a UBCT in Bangalore, but it's not able to do it because of these high ticket sizes. A property like a UBCT, a floor of it is upwards of about 20 crores, 30 crores, 50 crores sometimes. It's sometimes not just lifetime savings, it's lifetime earnings required for you to acquire. And by the time you get those earnings, the asset value is already jumped up even more and things are on the other side. So this is where we said that can we solve for this by democratizing it and get this audience, compete with this audience and make this a more competitive market in itself. Apart from that, from the transaction standpoint, we are going after the corporate real estate of India, which is today owned by the big boys like Blackstone, GIC, Brookfield, etc. The bigger white space which we identified was assets from 30 to 500 crores. There are no organized players today. These are mostly driven by these 8,000 families who have the ability to absorb this kind of an asset class and this size, or probably the treasuries or mutual funds or insurance companies who now have the ability to invest into corporate real estate as such. But this is the segment which are going, because below 30 crores, there are enough and more HNIs who would put 5-10 crores, take LRD for the balance and acquire the asset. But 30 to 500 crores is where this is, because an ultra HNI typically comes with these expectations that I want the cheapest deal, the best deal at the best price. But he forgets the guy who's selling is also an ultra HNI. He's not going to sell you out cheap unless he's insanely stressed. So getting stressed is opportunistic. You might not get the opportunity when you want, and you never know if the opportunity gets slipped by somebody else. So this is exactly what we are solving for and trying to bring the best corporate real estate to a platform where investors can invest. Now, how do we do our entire business? We do our asset selection. I'll give you criteria on how we do it. We then allow investors to invest on a platform. Once the asset is acquired, we do active management and keep sharing investors reports about the entire asset, your rent reports, etc., and then help you liquidate the property when everybody decides to liquidate the property. You can sell in between, etc. I'll come to that a little later. But from an ownership structure, which is one of the most important, like I said, solved for the most age-old solution through a legally structured product, is investors today invest to an escrow account which we've created, where we have trustees and escrow agents. We work with Vistra. Vistra manages close to 10 lakh crores in India. They are the escrow agents and trustees where all the money flows. Assume it's a 50 crore asset. We first call for 10% as EOI, expression of interest. And then once the asset is fully funded, let's say it's 50 crore, the minute I have 5 crores, I say the asset is funded, and then we do the drawdown notice and ask for the balance money from the investors, and then move the money into an SPV. SPV is nothing but a special purpose vehicle. These are private limited companies which own assets. The most institutional way of acquiring assets. Most of the funds are trust. They can't own the assets directly. They float private limited companies and they acquire properties as such. So this is the structure which is what everybody follows. We follow the same structure. We issue 2 types of securities. We issue 10% as equity shares and 90% as CCDs. CCD stands for compulsory convertible debentures. Now the coupon rate of the debentures is prorated to the rent. So whatever money comes to the investor is distributed to them on a month-on-month basis. So that way at the company level, there are no tax leakage. Whatever comes gets distributed to the investors, so that whatever you get, it's completely taxed at your hand at the end of the day. So this is the structure which we follow as such. In terms of property screening, multiple things which we do, and sometimes our investors have been very helpful in terms of our due diligence process as well. So first is, what is the location advantage? What are the specs of the property? Which kind of a tenant this is, or what kind of gentry of tenants would come into this kind of properties as well. Let's say I buy a property in Thane. I know for a fact that JP Morgan's main office is not going to come. It's only going to be their back office, which can come into these markets. So understanding the gentry is also important, which means in Thane markets, you'll find bargain hunters for whom rent is critical. For them, they'll save every rupee if possible. Whereas somebody who's looking at taking an office in Worldly, in BKC, etc., for them, it's location, because it's a way they can attract the best of best talent. At the same time, for them, rent would not be such a critical, but location, the quality of the building, etc., would be very important. So now both have value, both create multiple returns, different returns for different investors. But point of view is we look at that screening potential, what kind of returns we can generate out of that particular property, and then acquire. Second comes due diligence. We use top tier 1 law firms who do due diligence, and then we bring it and we give access to investors to read through the due diligence report before they invest even a rupee on a platform. Now, but frankly speaking, these grade A assets go through multiple layers of due diligence before we acquire. To give you a context, first, when the developer buys, he'll do a lot of due diligence, use the best law firm, then invest 100, 200, 500 crores, whatever of the asset value. Second, most of the developers would take construction financing or an NBFC to invest with them. Or an investor perhaps, they do due diligence, and then the property is funded with the developer and it's built. Third, the tenant does its own due diligence before acquiring, because tenant is going to make this as their own house. They stick around for 5-10 years. They invest in fit outs. They do the due diligence and then acquire. And then strata comes in and does due diligence and then acquire. So a lot of the due diligence work is already done for these grade A assets, and then it comes, which makes life relatively easy for us. And then we bring it up. Third, very important, is the tenant's research itself. Tenants' financials, are they strong enough to ensure they can keep paying rents? What kind of division of the tenant this is, especially after the pandemic. This is very important for us to know, because if pandemic comes back again, there are certain departments in certain companies where they'll be the first one to go up. And it's important for us to look at that kind of perspective, take a calculated call, and then look at investing for investors. Then the entire in-depth financial analysis with respect to what kind of future growth, what kind of past growth the property has seen, how the rental growth has seen in this entire market, and then we look at investing. And then we have a formal investment committee headed by 2 large industry experts with close to 30-40 years of experience, who come in, approve it, and then we list the asset on a platform for investors to acquire. One thing which is very important is the role of data on a platform. I'll just show you, presuming most of you are from Bombay or are aware of Bombay because of your association. I'm just taking, let's say, one of the properties, one of the most marquee properties of BKC. I'm just taking one BKC to give you an idea about the kind of data we sit on. Is the entire analytics, how much area got leased, how much got unleased during respective years, what were the building average rents in 2018, 19, 2020, how many clients have signed up 50 to 1 lakh square feet, how many clients have signed up less than 5,000 square feet. Again, understands the gentry of the tenants or the kind of space which will get absorbed in future if your tenant leaves, etc. How many clients sign more than 5-year leases? How many clients sign 3 to 5-year leases? How many clients sign 1 to 3-year leases, etc. And who are the top occupiers? When are the lease expiring? Again, but getting floor by floor data, each and everything. When did the rent start? When is the rent ending? All the other information for every property. We sit on, which gives us tremendous amount of power to take a calculated call. So it's not a gut call. It's not a hearsay call. And I spoke to a few friends who understand the market. This is all concrete information which we get. These are all from the sub-registrar. When any data comes, it's authenticated by a sale document, lease document, mortgage document, and accordingly, we go ahead and acquire assets. So getting the entire information, let's say I'm just taking one sale value, who bought at what price, which floor, how many car parks were acquired, what is the sale purchase price, etc. All this information becomes very handy for us to take a calculated call before we give access to our investors to review this before they decide to invest through our information memorandum, which we share it to them. Another very important point is the whole micro market. We have data, like I said, from 2012. I'll just take probably BKC itself as an example. So how much stock existed then, how much stocks exist now? Clearly, you see it's a flat market. There's no stock which has been built in BKC in the last because there's no land. But now that the lands have been given, you'll see new stock coming up in BKC as well. How have the rental trends been? How are the rental trends now? So you see more or less in the last 8-9 years, it's a flat market. The rentals haven't jumped up, but also because the good buildings like Capital, 1 BKC, etc., have seen, but the other buildings have become old and not having great upkeeps, because of which the entire market's rents are there. But certain buildings in BKC have seen a phenomenal growth in terms of rental returns over there, like the Capital or the BKC, 1 BKC, etc., has seen that kind of growth. But anyway, the idea is all this information is critical for us to take a call before we list an asset on a platform, and then we acquire. So we know the real estate does not have an MRP, but with all the things which we do, we are closer to probably 95 to 98% MRP in terms of pricing, or a more informed decision, data decision, etc. Sometimes our investors are also very helpful. We get to know which industries they are from if they give us information when they sign up, that which sector they work at, etc. So when we get an asset of that, we always feel free to reach out. Our investors are quite helpful. They share information that how the sector is doing, or how this company is doing, what is the track record, etc. And then we are able to take another informed decision for as well. Now, like I said, from an investment standpoint, whenever an asset is live on our platform, investors can sign up, do their KYC, express their interest by placing an initial advance. Once it's subscribed, we call for the balance money, allocate securities in the private limited company which will own the asset, and then we continue managing. Now, does Strata invest in any of the assets? No. We are only asset managers. Our interests are completely aligned to only make money for you and not make money for ourselves. If I invest, this is the conflict which we see, and hence we act as pure platform asset manager, where we handle everything on your behalf and continue operating. Give you a little glimpse of what kind of dashboard and access is there for you as an investor. I'll just probably take you guys through it. In the pandemic, we had invested in one of our properties, the only property we've invested till date, because many investors wanted us to do it, and we've done that. I'll just show you a glimpse of, again, what technology can play in terms of taking informed decisions, which I just showed you, but how technology can ensure the most invested asset class, but the most broken information system as such in India is what we're solving for through this platform. So one is you can open as many linked accounts through the platform. Something which we realized from our investors is many people want to invest. Let's say Lata ma'am does all the financial decisions on behalf of our entire family. So instead of having multiple login ID passwords, which is impossible for people to track, we allowed people to open as many joint accounts, partnership account, LLP, HUF, private limited, individual, public limited, whatever, where you can track everything through your dashboard as such with one login ID password itself. So based on your portfolio, you will get an entire idea. Transactions, again, knowing all your buy, sell, interest transactions on a month-on-month basis, it's all available on the dashboard for the investor, for him to keep track of. All the reports, rent report, TDS report, TDS certificate is all available as well on the dashboard for the investor, along, like I said, with your Form 16A as well. So for your advanced tax reports, you don't have to reach out to anybody. It's all available on your dashboard for you to track and file your income tax returns as well, very seamlessly. All the property documents of your asset which you invested, your share certificates, all the property documents, lease deed, sale deed, title report, insurance document. We take valuation report every 6 months. The valuation report, etc., gets updated. We're just trying to make it even more intuitive for investors to understand. And then the SPV documents itself, whether it's GST, certificate of incorporation, PAN, etc., are all made available on the dashboard for people to see. All these are physically kept with our escrow agents and custodians in their offices. So in case anybody wants to review, we say give us a 48-hour notice. You can go to their office. We'll get the permission sorted, and then you can review it originally as well if anybody wants to at the same time. Again, the SPVs, bank statements, etc., are also plugged in for investors to keep a track of the entire investment. As such, how much money came in, how much money went out, and property analytics is where the data comes in. We invest in a warehousing, hence we don't have the access of the property analytics here. But otherwise, when you invest in office, you will get to know all the other floors. If there are any sale transaction, you'll get the entire information on your dashboard itself. Apart from what the valuation report will also give you, this will also have that entire thing. So this is what we made, trying to make it even better and intuitive. We're building our app, which is already live for existing investors, where they can invest and they can keep tracking on their mobile as well on a real-time basis, something which we'll open it for everybody very, very soon as well. Now, what all we handle for investors? You invest, you may be in Bahamas enjoying your holiday, you invest, but everything else is taken care for you. We handle everything. All the information, like I said, is already provided before you decide to invest. But post your investment, asset management, lease negotiation, tenancy management, asset upkeep, taking a valuation report so that you're well aware of what the valuation of your investment is as well. And that gets notified to you. And accordingly, pro rata, your investment value increases or is probably flat. Dedicated investor manager. Whenever you have any queries, you always have someone who will answer your queries. We have a good support team which will take care of the services, take care of rent disbursements, tax center, which is going live very soon for investors to, especially for NRI investors, to help them, help them file their taxes or advise them on the approach of how to book it or whatever, as such, because, we deduct a lot of TDS for people with different TRCs for them to take benefit. As well, that's when the tax center is as such. Unfortunately, that's how the law in India works, and we are here to help NRI investors as such. Now, people ask, how do we exit their investments? First, very important that if you don't have a 5 to 7 year or a 3 to 5 year kind of an investment mindset, it is not recommended for anybody, or in any real estate product for that matter. A real estate as a product takes time for it to mature. Takes 4 years, 5 years for it to mature, for you to generate the best returns for investment, because you're not just investing for rental returns, you're investing for capital appreciation as well. And you don't double your money every year in real estate. Probably there were years where people could do it, but not anymore. It's more evolved, more organized market as well. So it is a 5 to 7 year kind of an investment mindset, which one should have. If you don't want to park that kind of wallet share for a long term, then it's not recommended for you to invest, whether through a platform or any real estate product, prima facie, unless it's like a debt instrument or whatever as such. So very important. One thing which we do is, at the end of 3 years, every year we call for a simple online poll. You'll have a poll system on your app as well as on the dashboard, where investors can poll and say, yes, we want to go ahead and sell the asset. We go back in the market, take all the efforts to start selling your asset for the investors. Or if you get a buyer who's keen to buy, like we've got a couple of our assets where we've got funds who approached us wanting to buy these assets. That's the time where, we go back to investors and say, do you want to sell it? This is the offer we've got. You say yes, we go ahead and felicitate the entire sale transaction. Apart from that, you're free to sell it to your friends, families, etc. You can always do a private transaction. Valuation reports are there on the board for investors to share it to any of their prospective people who they want to transfer. You can gift it to your kids, to anybody else as well. And then the third, which is resale platform, where we help you find another buyer in case you want to exit a particular option. Now, this is not gold, which means today I want to sell it, I want the money tomorrow. It doesn't work. You need to have a 6 months kind of a time frame. It may take time, and many of the existing buyers are very happy picking up more stake in that asset if things are going well. But having said that, this is not gold. You may time. This is an illiquid asset. This is real estate investment, and it may take time. But the kind of liquidity which we have been able to create because of democratizing it, the chances of exiting or liquidating is much faster. So as of today, we've 100% successfully liquidated all the secondary holdings which we had, especially in the second phase of pandemic in last April, May. We had a lot of people who wanted to exit because of them requiring funds. We were successfully, and now again in Omnicon, we wanted. So close to about 18 to 20 sale transactions have already been executed, all within a week. Now, this is not a promise that can everything happen in a week, but currently the way we see it, you always see people acquiring it very, very fast if there's any kind of an opportunity. But having said that, if you don't have that mindset to invest for 5-7 years, absolutely not a product for you, or any kind of real estate product in general itself. Now, who can invest? NRIs are also allowed to invest from your NRE or NRO account. We transfer into your NRO accounts only. Whether HUF, LLP, private limited, etc., no problem at all. We don't accept money only from trusts of FDI and from minors. Everybody else is absolutely fine for them to invest on our platform. So minimum is 25 lakhs. This is something which we've consciously kept because we feel maturity of investors is also important. But we are actively working on reducing the ticket size as well. There are certain structures we do not allow you to do it, but we've been actively working to ensure we can reduce the ticket size over the years. Recommended time frame is 5 to 7 years. Like I said, average rental return is about 8 to 12, which means you may enter at 8 and then your rental escalations happen 15% every 3 years, where on an average you might be making about 10 to 11% as rental return. And then overall IRR can be 10 to 15, 16% basis rental return and the appreciation, of your holding period, which you have as such. Now, taxation is a very important question, which I'm sure many of you all might have. How will I get taxed? So this is treated as just another income which you receive, like your FD returns or your bond investments, etc. This is although a real estate investment in totality, but you're buying financial securities of a company which will eventually have no other business but owning the asset as such. So your investments are going to be taxed as financial securities, which means you can't take that 30% standard deduction benefit, which you get if you invest into real estate directly as such. So this is going to be taxed basis your tax bracket, which you are into as such. We deduct 10% TDS and we distribute rents to investors on a month-on-month basis. If you have your Form 15G and if you're not eligible, we take care of that and don't deduct TDS for investors. So you have to do that every year with us. It's an online form, and then we don't deduct TDS for investors. Now, in terms of sale, you can take indexation benefit on your investment. So typically about 4 to 5% year on year based on the inflation, based on the cost of inflation index. That is not taxed. So if your property are growing at 4-5%, which is on par with inflation, then more or less there's no capital gains tax at all for your investment returns. Having said that, let's say indexation is 5% year on year, you made 6, your capital gains is 20% flat if you hold beyond 2 years for that 1% which you made beyond the indexation, which means 0.2% of the 7%, 6% which you made is going to be your net tax for that, which is very, very tax efficient on the hindsight because of the indexation benefit which you make. For NRIs, again, you can invest from your NRE, NRO account, and we credit rents only to the NRO accounts so that it's non-repatriable. Through the LRS scheme, you can take out $250,000 a year, etc. Based on your tax treaty of your tax residency which you have, we deduct different TDSs, different countries with India with the double taxation avoidance agreement. There are different TDSs which is there, but prima facie it is 20.8 for people, and you need to file your tax returns here so for you to even take your benefit over there, etc. And in terms of sale, 10% flat without indexation is what you would have for long term if you hold it for more than 2 years as such. Now, one of the most commonly asked questions to us is how are you different from a REIT? In a nutshell, we are a private REIT. We are not a publicly traded REIT. To give a broader idea as such, minimum investment in REIT is much smaller. It is the share price. Let's say an embassy REIT is 300 rupees, whereas it's 25 lakhs here. The REIT's yield can differ based on the price at which you enter. Let's say an embassy REIT listed at 300, went up to 480, 490 rupees, and then crashed in the pandemic to 300 again. And I believe now it's trading at 350, 360 rupees. So point comes, did the real estate also go from, let's say, 10,000 rupees per square feet to 18,000, 19,000 rupees per square feet, crash down to 10,000 and now trading at 12,000? No. But because of its stock market nature or its listed nature, it is subject to stock market volatility in the way. So which means the REIT is not directly proportionate or attributed to the real estate return, which is what it should be. Unfortunately, across the West, across Singapore, etc., all the REITs, the best performing REIT does not grow more than 3, 4, 5% year on year, except the data center REIT as such. So in India, it is very, very different. It's very volatile, and it's absolutely not, there's no correlation at all to its underneath real estate, unfortunately. Dividend payout is based on the fund cycle. It can be monthly or bi-monthly, or it can be quarterly, etc. Everything is paid monthly over here. REITs can have 10% of non-revenue generating assets as well in their platform. All the assets at Strata are revenue generating. We do not take anything which is speculative for investors. From a taxation standpoint, REITs and Strata more or less are the same taxation. Also at the same time, and REITs can take a lot of debt on their platform. Today we don't take any debt, and if we take debt, we make that as a new product and we bring in, but otherwise REITs can leverage themselves as much as they want, up to 49% of the asset value, and they can enjoy the returns. So that's how very different. Both are great products, but this is more about you having direct control over your asset, completely in sync with the value of the asset, whereas REIT, which is very, very different. And sometimes because of its liquidity, which is Strata, I mean, probably what we do is far more illiquid than what REIT is. But sometimes I believe for people with the real estate investments, liquidity sometimes is a curse as well. You see a great opportunity, you liquidate it immediately, you deploy. If it does well, great. If it doesn't, you lose out on your investments which you made. But sometimes real estate, and this is something which we heard from our investors, I want to park this so that I'm not tempted to exit out immediately into something else, because I want this to be held for long term, for different buckets or different goals which I've set for myself, and I want to park that money and enjoy passive returns from my investment. Right. So this is pretty much one of the core differences. Again, in terms of performances of the REIT, I'm sure you can see the volatility in itself. Real estate does not have that kind of volatility, fortunately. So 3 years back, listed at 300, currently trading at about 350 rupees as such. But in the last 1 year, Jan to Jan, 0.5% has been the growth of the REIT, and the dividend yield is 6% at 350 rupee levels for investors. Mindspace REIT has been a flat REIT, again, negative 1% in terms of return. Dividend yield is 5.7 as such from its current price at which they are there. This is as of January. Obviously, things have changed in the last 2 months. Brookfield REIT, again, 1 year performance fantastic. Had grown 8.9 because they're the last in the entire listing, because others are listed 2 years or 3 years back. But dividend yield of Brookfield is just 2% because they're highly leveraged. So the total net returns which the investors are making is just 2% in terms of dividend yield. Now, what are the risks which are there and how do we mitigate them? Capital risk is low because your recovery of your principal amount comes through rental income itself, and you actually own the asset through the SPV. And one thing which I know is lands are limited in India. It's not an unlimited stock. We cannot keep manufacturing more lands in India. And getting clean title lands is no joke. So getting ownership of the land directly or indirectly through the SPV also has value, which is not going to diminish at any given point of time, which means your investment is intact with your land value, which means your capital is not going anywhere. Maybe it can get stagnant, but it's safe. Liquidity risk. Like I said, if you don't have a minimum horizon for 3 to 5 years, it's not recommended for you at all. But we work on multiple ways through which you can liquidate your investment. But the best way to liquidate is when all the investors come together and we take a call of liquidating the entire property together, because that's when real property unlock happen, whereas just a unit might not get the real value of the asset at that point. Real estate risk is low. We take care of due diligence. We get the best law firms to do it. Most of the properties are we buy only pre-leased, are having reputed blue chip grade A plus tenants who also do their due diligence, etc. Tenancy risk is medium. Tenants can leave after the lock-in is over, which is when we come in as asset managers and continue managing the assets on behalf of the investors on a regular basis through the platform where they can keep track of it. So let's give a quick about us. We are currently inching towards 600 crores in terms of AUM, all achieved in the last 18 months. One thing which we're very proud of is in spite of the pandemic, we've been able to build a large portfolio for our investors into more stable asset class and have been generating and distributing. We generate close to about 4.5 crores of monthly rents, which we distribute to the investors on a regular basis. We have 2.5 million square feet under management, spread across multiple cities like Chennai, Hosur, Bangalore, Hyderabad, Bombay. We did a very interesting opportunity in Jaipur as well, and intend to keep scaling up Jaipur markets over the period of time. We have tenants like Swiss Bank, Capgemini, Wakefit, Microplastic, which is a Premji company, Randox, which is a UK-based pharma company, etc. All under our portfolio, and we take care of tenant relationships and take care of any future requirement they have, and give that as a first opportunity to our investors to own those particular assets as well. Just our recent opportunities which we've done. So a mix of warehouse, a mix of industrial facilities, a mix of office, a mix of an SEZ property in Hyderabad as well. So we many of our investors have diversified across all their investments as well, and which is where they're not concentrated towards one kind of asset, one kind of tenant industry, one kind of micro market, but have literally in true sense diversified their investments across multiple properties as such. Me and Priyanka started the entire company. I've been a lawyer prior to this. Advise multiple companies in their investments in India, especially cross-border, etc. In real estate, private equity, and technology law. This is what my background. Priyanka, on the other hand, was a hedge funder with D. Shaw, became the real estate head analyst for WeWork in India. So all the properties WeWork has absorbed is all done by Priyanka as such, and she's the interlink between US and India. WeWork India is their most profitable country in their entire portfolio. Again, obviously the demand says, but also it's all about choosing the right assets also at the same time. And then just the rest of the team who come from either technology or real estate background in a large way, whether they are working with Piramal prior to this, Ankit, who was head of marketing at Avail Finance, which just recently got acquired by Ola, Saloni, working with Birla Estates, Pratik, who was head of finance at SmartWorks, etc. So all the folks who come from their relevant background, come together with a clear goal of solving the corporate real estate market and not letting only foreign funds have a piece of it, and let us as Indians who are only investing currently into residential real estate purely because of size, lack of opportunity, etc., making them move their debt investments or return investments with 1-2% returns into more fruitful investments through our platform as such. We've been fortunate to be backed by 4 large venture capitalist funds. Elevation, erstwhile SAF Partners, was our seed funder. Kotak Investment Advisors, one of the largest private equity real estate arm of Kotak Group and in India in itself, is one of our investors. Mayfield, which is a US-based fund, early investors of Licious in India, BharatMatrimony.com, etc. They are one, they're based out of Bombay itself. And Gruhas, which is a new PropTech fund by Nikhil Kamath and Abhijit Pai, who are driving the whole real estate infrastructure business in a large way and trying to change through technology. I believe PropTech is going to see a huge change in the next 1 year. Probably a right time for PropTech companies to come, whether it's for ESG, for water conservatory approaches, the platforms like ours, or multiple other things. I think we're going to see a huge upswing of real estate in the next 4-5 years, and PropTech can solve for things in a large way. So like I said, all our property documents are maintained by Universal Trusteeship. It's an ICICI portfolio company where all our property documents physical are kept. Scanned copies are made available on the dashboard. Vistra is our trustees for all our SPVs as such and the escrow accounts. We bank with HDFC, and all the payouts which keep coming to investors are through Razorpay itself. So things which you're solving for through Razorpay is probably another 2-3 months. We'll start accepting FDI on our platform as well, which one of the biggest things was compliance, which Razorpay is now solving for. And we'll soon allow investors to accept money in FDI as well. We've got Sharia audit, which allows a large set of investors who were not investing earlier to also start investing through our platform and enjoy returns for themselves. So this is a quick background about what we're doing, how the space is, especially in the US. If I have to take an example, when you have time, check out this company called Cadre or Cadre, CADRE.com. They are 6 years old. They manage $4 billion, selling $50,000 ticket sizes to investors. So clearly a space which we feel is the right time for India. And I think if not for pandemic, we could have not been here where we are in such a short time, because it takes time. Like what Ola did years back, bringing a huge customer behavioral change by making people say, you sit at home, a cab will come, will pick you and drop you, don't have to show them the route, etc. Never envisage my grandmom using Ola and booking her cab and going wherever she wants to. I think we are also trying to solve for the most age-old erratic industry structure in the industry by going to the property, reviewing hundreds of documents, going to the registrar, sitting the entire day, registering the property and coming. We're solving for everything to the investor, where digitally they can invest and they can start enjoying. We have about 1,800 investors. We've all met them only through webinar and Zoom, unfortunately, because we haven't met them. But we've still transacted upwards of 600 crores through platform, and a massive repeat base, purely because people have trusted us, which is one of the most grateful things for us. But more importantly, we've taken feedback and tried to keep innovating, try to ensure technology solve for this in a large way, and make real estate, which is a very local business in itself. I come from Bombay, I'll invest in Bombay. I want to invest in Bangalore, but I have no idea about the law. I don't have no idea about how to find the opportunity. I have no idea about price benchmarking, etc. But you want to invest. This is what we've done. We made real estate a national business, where today, when we bought our Swiss Bank asset in Hyderabad, it's a 44 crore asset. We had 1 crore from Hyderabad, but 43 crores came from outside Hyderabad, from Bombay, Delhi, from UK, Canada, etc., and invested into the asset. So as much as we thought it's national, but it's becoming a global, because we're getting close to about 20-30% of our investment on a platform are NRIs who are investing. So this is the huge customer behavioral change which we brought, solving for a large pain point in the industry through technology, and trying to do the best for everyone. Yeah,
thank you, Sudarshan. So would you like to check on the chat box for the questions, or
sure.
Others, you're also free to unmute yourself and ask questions.
Okay, I'll just take the first question from Mr. Jamil. How's the rental yield this high? Nowadays, yields have reduced below 5%. General, no. If you have the appetite to buy 50-100 crores worth of assets, your yields are upwards of 8% as such. So it's not 5. Residential are 2-3% as such. Now, if you have an appetite to buy 1 crore, 2 crores, then in a Bombay market, you'll get a small shop where the tenant is some roll company or whatever as such. You might not have a grade A client. I think in 2 crores also, you might not get anything of that nature in Bombay. But having said that, these are grade A properties with grade A clients which generate these kind of rental returns. So this is industry benchmark. 5% is very, 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 very low from industry benchmark as such. Great. We have a question from Mr. Kshitij. Have you thought about tokenizing the assets on any blockchain platform to address the issue you mentioned about liquidity, minimum ticket size, etc.? We've been working on a couple of things as such, but not tokenizing it. I think the general mindset to a lot of our investors today, when we talk about blockchain or tokenizing, they relate to crypto and they feel it's illegal in itself. So we've not purposely done in that direction, but we're working on different structures to reduce the ticket size for investors to start accepting investments on our platform. But as of today, no thoughts put in to tokenize the assets or use blockchain, etc. Because at least from a registration standpoint, till the government does not do a lot of the effort, there's no point you implementing blockchain at all. Great. We have another question is from Mr. General. Is the entire purchase in white? How do you handle cash, black transactions as such? So this is one of the things which we are solving for. Most of our investors, we haven't met, like I said, they're all online. They transfer the money online, they acquire the asset online, etc. So there's no question where I have 10 people and I say, everybody pay 10,000 rupees, transfer it to me. How will they transfer, etc. Right? So we don't, in fact, to a point where, unfortunately in India, even during registration, there are elements where you have to pay fees to certain people to get things done. We are not involving ourselves anymore at all in these kind of things. We always put it on the seller that it's your responsibility to get the property registered. So we are not averse to any such transaction also happening with us. Everything is in white. There's no question of gray or black. It's purely white. It's online, and we acquire assets. And I believe in these large corporate real estate world, a lot large part of the whole cash economy is getting eliminated because your guideline value is almost 90-95% of the market value of the assets. So there's no point for someone to just take for 5%, take that risk, and try to haggle around. But today on our platform, there's no question of this kind of transaction at all. Great. Who takes the decision in case issues arises like change of rental player, rental amounts, liquidation, if any of the tenant defaults, etc. So that's what we do as asset managers. We handle everything on your behalf. As such, if there's anything, again, certain decisions we come back to you and take your approval and then do it. Otherwise, general asset management we handle, and like I said, you have all the data of the rents, etc. 5%, 10% deviation here and there to your tenant or whatever can be done, but we take care of those decisions on your behalf and keep you well informed. And certain decisions, if we need to take, we take it from you. We have a question, Mr. Ajay. What if a set of people never agree to sell together if there's a long stop? So the approval mechanism works. If you get 75% majority saying yes, go ahead and sell the asset, then the 25 have to tag along. You sign up for that and say yes, I'm okay to tag along if majority have taken a decision. So if you're a part of the minority who does not want to sell and the majority has sell, you have to sell it. Likewise, it can be vice versa. You may want to sell, but the majority think there's still value which can be created over the years. And we stick on to the investment. So decision is in the hands of the investors. Obviously, we recommend when is the right time to enter, exit. But end of the day, it's your property. You take a call as such. We have a question from Mr. Shantanu. Is there any plan to include residential property? No. We make 2% returns. There's no point at all. You rather keep your money in fixed deposits than parking into residential real estate. I think in today's world, if you're not buying a house just to stay in the property, I think it's not a wise decision to buy residential. You would rather look at FD bonds, equity markets, etc. But residential real estate is not going to give you return what you want as such. Today is clearly a massive supply market and very, very less demand market. Obviously, in the pandemic, things changed, especially in a market like Bombay. Everything got sold out because of the stamp duty waivers, etc. But having said that, still a lot of demand, there's a lot of supply. To give you a very good data insight, yearly close to about 3 lakh apartments get sold in India. 45% of that is investment, 55% is end use. Let's take a simple math of 50-50 and a crore an apartment. You're talking about 1.5 lakh crores every year parked into residential real estate for 1-2% returns, which is what? I mean, you buy a property in Worli today worth probably 20 crores. At max, you can generate is about maybe 2-3 lakh rupee rent as such, right? So net return is sub 2%, 3% what you would make on your investment. So in fact, it's not even taking care of your EMIs because your EMI is 7%, 6% in terms of home loan. So this is the gap, and I think it'll continue to be that. Unlike US markets where multifamily homes as a concept does very well, in India, residential is an end-use investment market now. It used to be an investment market earlier, where people, when the apartment boom started, people used to book apartments, trade it off till the apartment was completed, etc. But many people have even burned their fingers because those apartments never got completed also, right? The whole Unitech, all the other issues which were there because of which RERA has come in. These are things also which are there. So with high returns, risks are also higher. With low returns, your risk is lower as well. So take a call based on your investment planning or your risk-taking ability and decide. But we are never going to be inclined towards residential. In fact, we tell people to stop investing in residential. Keep it in FDs if you don't want to give it to us, but keep it in FDs or bonds or any other thing. But residential in today's world is something which is only going to lose you money, not going to make you money at all. Great. Quick question from Mr. Pawan. How do you see the business growth of fractional real estate in the next 5 years? So I'll give you a constructive idea on 3-4 things. First, when I look at Indian office market, I think it's going to be about an 800-900 million square feet market in the next 4-5 years. The large funds would continue to buy and build and own probably 500-600 million square feet of office space. You're talking about another 300 million square feet of space which is available for grabs, which are only going to be bought by HNIs or corporate treasuries as such. Now, presuming 100-150 million square feet of office space is one of the assets which smaller ticket sizes. People have bought, developers have funded by selling smaller assets to their investors, etc. But still a sizable 150, 200 million square feet of market will exist in India in the next 4-5 years. Now, a million square feet is 10 lakh, even at 10,000 rupees per square feet, you're talking about 1,000 crores. Into 150 is what is the market of only office. Then you talk about hotels, you talk about warehouses and industrial assets, you talk about retail, you talk about hospital assets, data centers. It's a very, very large market. And unless domestic capital does not come into corporate real estate, this sector cannot grow. To give you a contextual idea, I'll compare China to India because I feel we are at the cusp of the same kind of hypergrowth China saw, especially in manufacturing in the next 5-10 years. Chinese real estate, commercial real estate has 75% of their money from domestic, 25% is foreign funds. In India, it's 80% foreign funds and only 20% domestic. Now, why is that money not getting parked? Why is that money not there? Isn't this a great asset class? Why not own a BKC asset and enjoy, Deutsche Bank, Pfizer as tenants? But you're not able to do it today, and only these larger funds with larger ticket size were juicing out the assets and the kind of returns coming to a REIT, and then you buy when the entire juice is taken out of these assets. So the idea is that we feel unless we don't democratize these asset classes, I think India is not going to see that kind of growth which it can potentially see as such. So in a way, we're very proud of what we're doing, but I feel in the next 5 years, this can be upwards of $1 billion, $5 billion kind of market in India itself. Great. We have a question with Deepak. I saw 20% fees for strata for exits too high. So it's not 20%. It's only if you make a X IRR, which is 10 to 12% as net return, which you should make on the entire investment through our platform. Anything over and above that, we take 20, which means, let's say 12% is the benchmark. You made 13% overall return. Then on that additional 1%, we'll take 20%, which is 0.2 as additional performance fee to ensure that our interests are also aligned and do the best for you as a group for itself. So that's a fee only if you make an X return. Otherwise, we don't charge you.
The earlier one is a follow-up question from Ajay. When he was asking about if there are people who are not agreeing to sell the property.
Yeah. So we continue holding the asset. And you can do your private unit sales exit through our platform, because if there are people who don't want to sell because they still believe, you may not, they'll be the first ones to buy the property, the units from you as well, right? So, but otherwise, if people are deciding not to sell, then you cannot sell as well. The entire asset cannot be sold, but you can always sell your units through our exchange platform in future as such.
I have one question. Long-term capital gain from equity is exempted if you invest in a property.
Correct.
Is that true also for investment done through strata?
No, sir. So in any investment, let's say you sold a residential apartment, you made returns. To save capital gains tax, you have to invest in property again. Yeah. The bigger thing is you can only invest in residential. Even if through the returns which you made, if you buy a commercial property, it's not tax exempted. You have to pay your taxes. So residential to residential is free. Stock market profits to residential is free. But in any commercial property, it is taxed. So likewise, our investment is...
Why don't you lobby with the government to change this law?
I'm too small, being very honest, to lobby for this. I'm sure there is a different intent from the government side why they don't want to do it. I mean, just to give you a constructive idea, who brought the whole own your own home as a concept? It is the banks, right? Because home loan is the biggest product through which a loan can be given in India, which is safe comparatively, right? Like if Deepak tomorrow comes and says, I want to start a business, bank is going to be scared, because if business doesn't work, my money is gone. But the same Deepak comes and says, I want to buy a house, bank would come and say, yeah, take the loan, because there is something which is physical, something which is going to be hold on to, and something where my money is safe also, right? So the whole residential real estate as a concept is a bank product over the years, which American banks have sold to the American economy and eventually trickled down to the world economy as well, that you should own your own house. You should start doing, because that's when the banks can keep lending more and more, and you are not going to let your house go because you invested a large money, right? So this is pretty much the whole concept of why residential real estate exists in a large way, and why the whole own your own house as a story, that whole roti kapda makan story, has been put into the minds of people over the years and will continue. Like today, my parents, just to give you a constructive idea, so like Bhavesh, for that matter, couldn't buy a car because he's preaching people take a cab, right? Uh, I can't buy my own residential house because I'm preaching people to buy commercial real estate, right? For that matter, unless it's my own house. But I stay in Bangalore in a rented apartment. I'm invested in commercial where I make my returns. It's far more than the rental returns. If I stay in my house, I make, so that for the rental returns, I pay the rent over here and I still make a hell lot more money if I had bought the house as well, right? But my mom's mindset is, you have the money, you should buy your own house. Why are you not buying a house? So and there are friends who are wanting to get married, and this is the only condition the girl's family has, that khud ka ghar chahiye pehle, right? So this is the mindset which has been put, traditional or whatever it is for that matter. But having said that, people get accepted in society if you buy a residential apartment also, right? So, but buy our own house, and I think it's a dream. You should own it for sure. But beyond another house, it is a criminal waste of money, in my opinion.
Okay, thanks.
One more question out there.
Okay, what kind of properties have you invested so far? You mentioned hospitals, etc. I was referring to farmlands. Given that many organic farms are coming in India, will you be looking at investing into that? So anything which can make my investors 10 to 15% return, I'm all in for it. Hospital is something which we're doing soon. We're working on one. We feel hospital sector is going to be on a big rise, because most of the hospitals earlier were all owned by the hospitals themselves, the real estate part. What we realize in the hospital segment is, it's not a patient problem, it's not a doctor problem, it's the real estate problem, why hospitals are not able to scale, why we have lack of beds, etc. And now that private equity is coming in a large way into these hospitals, whether it's Aster, other things, where there are a lot of private equity investors who own these, they've realized that buying your own real estate is a lot of sunk cost for a hospital. We'd rather lease it and be asset light in itself. So, which is why I think we'll see tremendous amount of hospitals which will open over the years. And these hospital assets comes with 30-year leases, 20-30-year lock-ins, which means it can be an asset which can be a legacy. You can leave it for your grandchildren perhaps and go out, because that's the kind of thing. Because hospitals, especially which are 3-4 lakh, 5 lakh square feet, never shut down, they get acquired. That is the approach which we've seen, at least historically, and we feel will continue to do so as well. So we're very excited, but we've invested in office, in factories, and in warehousing as of today. From a preference standpoint, factories we are mad about. We feel it's the best asset class because it's a cost center. It's for a warehousing client, it can be a rent, can be a very sensitive, but for factories, it's a cost center. They invest so much into machinery, they won't leave very soon. We bought an asset which is leased to Microplastics, which is a Premji portfolio company, which Premji owns 90%. These guys manufacture Hamley toys through the PLI scheme in India. Everything moved from China to India in a large way. Now, what we are very proud of is there are going to be 3,000 women working in this facility out of this center. We have a 10-year lock-in lease with the tenant, but we know they're not going to leave for even 20 years, because for a company of that nature, investing heavily into entire machinery, 3,000 skilled laborers coming in, people working into the facility, displacing for rent is the last option for them, which means we know they'll always stay longer. And from an investment standpoint, I think it can be a long-term investment for investors to just enjoy rents on a regular basis, forever, for that matter. Like 7-8 years, we'll recover our entire investment itself. Why do we want to sell it? We'd rather just keep holding on to it, enjoy returns for 10-15 years, and then look at exiting whenever investors decide. But these are the kind of investments we like to keep making, and we'll continue making as such. Farmlands, we need to understand the math. We need to understand how do we liquidate the investments. To one of the gentleman's question of cash, I think farmland is one sector which unfortunately is still very cashed strapped, or I mean, cash economy is very, very high over there because farmers are not going to accept everything in bank accounts, unfortunately. So hence it's a little far-fetched for us, but we hope farms can also be corporatized very soon, where we can put in and we can enjoy returns for our investors.
Ajay, you raised your hand.
Yeah, I have a question. If I understand properly, Sudarshan, you take a fees on the exit after on an IRR basis, not on a CAGR. So IRR would include the rental return in the end of the day.
Correct. So it's 10-12%. So which means 8-9% of rental returns, 4-5% of capital appreciation in total after that. So we used to do CAGR till we had 500 crores in AUM. Then we now moved to the IRR model. And it's only after that we take 20%. So you need to make 10-12% overall return, rent plus appreciation, and only then the performance will come.
So going by that model, if somebody sticks on for a very long time, the rental return will exceed your IRR percentage. And then the person would be, because that is something that I faced in one of the last properties that you had put on your platform, I believe, that we spoke about also. So somewhere or the other, don't you think that should still stick to a CAGR for the simple reason, or an IRR based only on the capital investment rather than
I'll give you a rationale why we've done that, and we're following the industry norm. That's how the industry norm also.
I understand it's an industry norm, but
I'll just tell you why we've done that. First, we wanted to do CAGR again, but why we've done it from an IRR standpoint is, otherwise I'll always keep recommending stick on to the property because we never want to make fee out of it. Assuming I'll say management fee is good, we'll stick on to the property, but IRR is a great kicker for us to ensure we exit your investments and make returns for ourselves as well, right? So hence from that standpoint, to ensure that we are all aligned, we never be biased, which irrespectively will not. But having said that, to not be that, we brought it up to an IRR model from a CAGR, which we used to follow for our investors early on.
That is where somewhere or the other, I think there is a, see, as it is, you're paying 10% extra in terms of taxation, if you had invested directly. On top of that, if it's held for a longer time, then you're going to be forced to pay the fee that you're paying. So in the end of the day, for us, as an ROI on rentals, we're deducting your fees as well, which is a regular 1% fees that you charge in the end of the day.
So I'll just give you an idea, at least what people have told us from a fee standpoint. See, again, today it is 1%. But what happens is, as your rents keeps escalating, our fee remains same, right? So it keeps going down technically, your returns only keep going up. But having said that, very savvy investors understand time value of money and what we offer. In fact, there are guys like 1%, tumhara ghar kaise banega? It's too low, you should charge more. I'm like, point being over here is a large investor understands the kind of privilege or the kind of service we offer, and they're very happy about it more than anything else, right? If you have to invest, you have to put your time and effort to keep managing, keep tracking, keep sending invoices, keep taking out property tax returns, etc. Now, if you're somebody with a 2-3 crore net worth, understandably, like, hey, I have all the time in the world, I can do it. But imagine somebody with a 5-10 crore net worth into some other businesses or into full-time job, etc. They don't have the time to handle, time to look at, and if they have to do, they have to leave their job, leave their entire day, go out, keep doing things, etc. is very difficult. Then managing the entire asset, when the tenant goes out, finding another tenant is no joke. Not everyone's having the expertise to do it, or the connections or wherewithal to do it. Our fee stops when there's no tenant. Our fee starts again when there's a tenant, which means we take care of all these things on behalf of the investors and ensure that their tenants, their properties are always tenanted out, etc. There'll be a great opportunity. I'll give you an example. You may own one floor, I may own one floor. I can assure you, your floor will never get leased till my floor does not get leased, purely because I'm in the market of working for my investors, but I'm a real estate guy. You're an investor. I work with all the brokers in the market. I work with all the partners in the market to get my property leased. You may know 10, I know 1,000, right? So my ability to know, and with the data I have, I know the ability to even cut you with respect to rents or anything to ensure my properties will all get leased. I'm saying all these are of a lot of value for somebody who understands the kind of service we offer in return for the 1% which we charge to the investor.
Okay. Anyway, that's something that is a policy matter of the company. Then, okay.
Lata ma'am, you're on mute.
Sorry. Yeah. Yeah. Thank you, Sudarshan. It's been a lovely session. I think it's quite of us. So loyalty program is what Narendran is asking.
Yeah, so we rolled out a loyalty program for investors. This is something which we had put in a mind that the minute we hit 500 crores in AUM, we'll roll out a loyalty program for our loyal customers. So, the fee reduces, the performance fee reduces to a point where it's even zero for investors who invest upwards of a threshold limit. So it's on our platform. It's called Strata Blue. Just go to our website. There's an icon where you can go through and you'll get an entire, probably I can just show you in a minute. So you get early access to it. Private resale window is handled. So basis the amount of investment you make, you fall under different categories: bronze, silver, gold, platinum, and you get different kind of benefits as such for your investment. So go through it. You'll get an entire idea of performance fee and other things which gets reduced drastically for investors who invest a large amount.
Thank you, Sudarshan, and thank you, Deepak, for sharing. Thanks for a transparent and systematic approach, is what Deepak said. So we will, any other questions that come to us after people watching our YouTube, we will get back to you, Sudarshan. Hope to be in touch. And thank you, each one of you, for being here. Those of you who have not met, I'm Lata Venkatachalam, recently joined IIT BAA as a CEO. And so it's a great pleasure having you all today here with us. Do get in touch if there is anything interesting that you'd like to hear from us, or with Sudarshan, or with any other programs that you'd like us to be part of. Yeah. Thank you. So a good afternoon to all of you, and thank you, Sudarshan, once again.
All right. Thank you.
Bye-bye.
Before we depart, I have a suggestion.
Sure.
That whatever Sudarshan's company posts in their dashboard, can we have some methodology by which it can be posted in our alumni group so that people are aware of what he's doing? Because I know one thing for sure, because I've been doing a lot of research on fractional property. One thing I can vouch for is I believe Strata is one of the most transparent, the most what should I say, worth company to invest into. So maybe if we can put it across with all our alumni association members, it will be helpful.
I think, Sudarshan, that made your day.
This will be very kind.
Someday or the other, I'm going to jump on to Sudarshan and tell him to make my date. Thanks, you.
Sure, we'll do that. Yeah. Thank you so much. Have a great day. Happy weekend.
Bye.
Happy weekend.
Thank you.
Bye.
Thanks a lot.
Thank you.